Welcome to Inside India. I'm JP Ong, and here are your headlines. The rush is on to list. WeWork launches its Indian IPO today as the Nifty tries to make a run for 25,000 in an attempt to end the week on a good note despite the shutdown drama out in Washington, D.C. U.S. Treasury Secretary Scott Bessent signaling a big breakthrough in U.S.-China trade talks soon as he also pledged support for domestic soybean farmers in the coming week. And India and China will resume direct flights this month for the first time in 5 years. Good morning. Congratulations. You've made it to the end of the trading week, and we'll see if Asian markets can end Friday on a fantastic note. So far, based on the morning session, we're seeing that most markets are trending green, at least. Now, it was the South Korean Kospi that outperformed yesterday. They are offline for a holiday today, but it seems that the Nikkei 225 has picked up the baton now, and they are up by about 1.4% with chip stocks. They're leading the charge. Keep in mind that mainland Chinese markets remain closed for the long Golden Week holiday, actually. But we are seeing that the Hang Seng Index now trends in the red, one of the notable laggards so far in today's session, down by 0.8%. Australia up by about 1/3%, and we're also seeing the Taiwanese TAIEX in Taipei trading about 1% in the green so far. And again, the reminder that Chinese and Korean markets are offline this Friday. The U.S. government has been nearly shut down now for nearly 2 days. And the White House is reiterating its threat of mass firings if the shutdown drags on any longer, with President Trump set to meet his budget chief on Friday. CNBC's Emily Wilkins has the latest.
Don't expect any jobs numbers from the U.S. on Friday morning. The September employment report won't be coming out until the shutdown is over. And the Senate is going to vote on Friday afternoon to try to fund the government, but that vote is already expected to fail. Now, lawmakers are not planning to vote again until Monday at the earliest. And S&P Global Analysis warns that an extended lack of data will add uncertainty to the Federal Reserve's monetary policy outlook. There's also a looming question about how big federal layoffs during the shutdown will be. White House Press Secretary Caroline Leavitt said thousands of employees will be laid off. In addition, about 150,000 federal employees who took buyouts earlier in the year are now officially off the payroll as the fiscal year ended. Trump's chief budget officer, Russ Vought, is turning up the pressure on Senate Democrats. Yesterday, he announced he would be delaying $18 billion in infrastructure projects for New York City and another $8 billion for green energy projects in states with Democratic senators. One potential off-ramp: a bipartisan group of lawmakers are discussing a potential path forward on extending Affordable Care Act tax credits, but discussions are in very early stages, and it's not clear a deal will come together. Emily Wilkins, CNBC Business News, Washington.
And without the non-farm payrolls report, markets are using other sources of data to get an idea of the jobs market in the United States. And the picture is mixed. Chicago Fed data overnight projected that the jobless rate stayed flat at 4.3% in September. But the hiring rate dipped and the rate of layoffs rose. In its latest survey, the National Federation of Independent Businesses reported that 58% of company owners wanted to hire, but 90% of that group couldn't find qualified applicants. Outplacement firm Challenger, Gray, and Christmas reporting that layoff announcements fell 37% on month in September. But the year-to-date level of furloughs was the highest since 2020, the year of the COVID-19 pandemic. The firm also says hiring plans have receded sharply and is now at its lowest level since 2009. Trade is the other major story we're watching. U.S. Treasury Secretary Scott Bessent telling CNBC that the Trump administration is set to get a big breakthrough with China. This as President Trump is set to meet Chinese President Xi Jinping later this month.
What gives us great comfort is the respect that the two leaders have for each other. So it'll be very helpful for them to be able to speak in person and set the framework for trade going forward. Our current trade agreement, we've been doing 90-day rolls with China, expires on November 10th. So I think with President Trump's leadership and his relationship, the respect that Party Chair Xi has for him, that this round, which would be our 5th round of talks, should show a pretty big breakthrough. and we can start talking about things.
And while Chinese and Korean markets are on pause, the Indian markets will be coming back from their holiday today, coming online in about 40 minutes. And here's what GIFT Nifty futures are indicating for the final trading day of this week. Now, we did see that last Wednesday, the Nifty was able to snap out of its 8-day losing streak. And so far, we're seeing that it is looking fairly optimistic, 100 points higher than that Wednesday close. But keep in mind that the Nifty itself has continued to face more headwinds with questions of valuations and also uncertainties with regards to the Trump tariffs really hitting sentiment out there. They are up about 5% year to date, but again, a bit paltry as compared to recent yearly gains that they've seen over the last couple of years. The Indian rupee also continues to soften today, and that is one to watch actually, with the currency continue to trend and test record lows, currently at about 88.71 against the US dollar, a bit softer than we saw the other day, and we'll see if that continues as the Friday session progresses. Now, India and China will resume direct flight status this month, and this is for the first time in about 5 years. India's largest carrier, Indigo, will operate daily non-stop flights between Kolkata and Guangzhou starting October 26, with plans to add more destinations later on. The move comes as tensions between the two countries show signs of easing after Chinese President Xi Jinping hosted Indian Prime Minister Narendra Modi in Shanghai last month. It was the first time Modi visited China in about 7 years. And we heard from Russian President Vladimir Putin. Commenting on U.S. pressure on India and China to scale back their oil purchases from Moscow, Putin saying the two countries, quote, will not allow themselves to be humiliated. He also issued a warning that the global economy depends on his country's oil to keep energy prices low.
It is impossible, but if we imagine excluding Russian producers and Russian traders who supply a significant portion of the world's oil, if that were to happen, prices would skyrocket and everything would go over $100 instantly. Whatever happens, the global energy market's need will still be met anyways. This will be done.
And Putin also spoke about Russia and India's payments issues, saying both countries must resolve settlement issues, whether through BRICS or other channels. New Delhi and Moscow currently trade in rupees and rubles and are negotiating a framework to link their digital payment systems for smoother transactions. Well, let's take a look at the Indian currency in more close fashion right now, with the Reserve Bank of India rolling out new steps to boost the currency's use in global trade. Authorized banks can now lend in rupees to non-residents in Bhutan, Nepal, and Sri Lanka for trade transactions. The RBI also plans to set transparent reference rates for currencies of India's key trading partners, aiming to bring more predictability to pricing. But tariff-related uncertainties continues to weigh on sentiment. The rupee has been sliding against the dollar ever since U.S. tariffs in India kicked in on August 1st. Mitul Kotesha is the head of Forex and EM macro strategy Asia at Barclays, and he joins us now to help us make sense of the rupee's recent weakness. Now, Mitul, thank you so much for joining us. I do want to start off, though, by some of those, the slew of announcements from the RBI, especially the move now to try and make sure that the Indian rupee can be accepted as a funding currency for loans in neighboring countries like Nepal, Bhutan, and Sri Lanka. Again, it's a move again to try and internationalize the rupee and give it more stronger footing overseas. What did you make of this, and how significant will this actually be for the rupee, both in terms of bolstering its international standing and also with regards to its direction throughout the year?
It is significant. I mean, I think it's probably about time that India moved on this path. Clearly, China has had a head start in terms of internationalizing the yuan. The problem, I guess, is for both India and China is that, you've got two currencies that have closed capital accounts, so it becomes harder to internationalize. But that said, India does have scope, in particular, as you mentioned, in neighboring countries where trade can be increasingly driven by the rupee. And I think that's a good start for India to start to internationalize the rupee. And I think, obviously, there's a long way to go. Rupees, in terms of trade and overall transactions globally, is still a very, very, very small share. I mean, China is bigger in that respect. But I think this is a good start on the path towards internationalizing the currency. And obviously, there's a long way to go going ahead.
Yeah, and this was just one of a slew of measures, actually. In fact, your colleague, Asta Gudvani from Barclays, actually said that the decision from the RBI the other day wasn't so much about whether they were going to cut rates and that was just the sidekick to this slew of measures that seems to be a lot more significant, actually. Do you agree with her thoughts that really it wasn't so much about their decision, but actually the slew of measures to try and to internationalize the rupee and also liberate and perhaps create the looser regulations around the banking and funding systems there?
Look, I think that's right. Look, the RBI has been very focused about providing sustainable liquidity to the banking system to get the credit flow going through banks to businesses. And I think there was a number of measures announced on that front, which will help. Clearly, obviously, there is still a tension on when the RBI cuts rates. We have pushed back our expectation to a December cut. So we still think it's a matter of time before the RBI cuts. And again, look, the inflation picture is very well behaved in India. We saw the RBI downwardly revise inflation forecast, even while they upwardly revised growth forecast. And we think that as growth momentum will slow in the next few months, with the current quarter perhaps being the peak, that together with a softer inflation profile does keep the door open for RBI easing going forward. So I think that policy expectations, the transmission mechanism and providing liquidity, especially via CRR cuts and through other means, as well as internationalization, show quite a comprehensive approach from the RBI towards the economy and towards internationalization.
Yeah, and again, it also there were strong cases for and against cutting rates, actually, and some actually believe that that perhaps it is actually in the best interest of the RBI to act ahead of the potential macro uncertainties. But there are some who say that because the economy has been so strong, that the RBI actually, it is in their favor actually as to deciding whether or not to actually adjust. My question though, Mittal, is that while the Indian economy has looked quite strong, how do we make sense then of the rupee's weakness? I mean, this is just a confluence of factors that have really ganged up on the currency and makes it trend in contrast to a strong economy, because usually a strong economy tends to lend towards a stronger currency as well, right? I mean, help us understand whether or not this really is a bit of a paradox right now, that weaker rupee against that robust economic outlook that we've seen from India recently.
It's a good question. Look, I think, as you said, the growth picture is solid. It's a little uneven between urban and rural spending, but nonetheless, overall growth has done reasonably well. I think, look, there has been a number of factors. It started off with the fact that we've seen an outflow from Indian equity markets continually this year, and that's not stopped even in the last month or so. And even though there have been inflows into the bond market from foreign investors, it's by no means compensated for a very substantial outflow. And I think part of that is because, a lot was in the price. I think Indian equities were seen to be fairly rich in value, and we've seen foreigners also shift their allocations into Chinese equities. With the boom in AI there, attracting a lot of that capital as well. But it's not helped the rupee. But look, I would say that the India's current account is far better. The services surplus is still very strong. There's no balance of payments pressures here, even with these portfolio outflows on the equity side. But markets have been worried about that. The other factor, of course, which has also helped these outflows is the fact that there's been no trade deal with the US. India was expected to be the first country or amongst the first countries to have a trade deal, and we're still not there. And India has amongst the highest tariffs globally, especially this focus about Indian purchases of Russian oil. That's not helped. And more recently, obviously, the H-1B visa issue as well has weighed. So I think it is a number of factors. What I would say is that the rupee is oversold here. The currency is extremely cheap on a rear and near basis. I think there is now a sense where probably any further weakness is going to be much more limited. The only thing that perhaps prevents strength or rebound in the currency to any real degree is the RBI might be soaking up dollars as it builds up its FX reserves.
Mittal, here's my question. Does weak necessarily mean volatile? Because yes, it has been weak, but it seems that economic policy watchers in India don't seem to be as concerned about that. Whereas you contrast that to, say, countries like Indonesia, where they said, yes, it's a really weak currency right now, but there's a lot of volatility that's actually keeping us up at night at the moment. Do you think weak necessarily means volatile? And is that a distinction or a differentiation that currency traders and market watchers need to be aware of when they're looking at the rupee's recent trajectory?
Yeah, I think that's right. Look, volatile in the sense that, look, there is no real structural concern about India's economy in the way that there was several years ago. As I mentioned, the balance of payments is in good order and reasonably healthy. The fiscal picture also looks very good. I mean, there had been some attention on GST rationalization and whether that would result in some fiscal slippage, but it doesn't look like we're going to see that to any significant degree either. So I don't see this reflecting significant concerns on policy or the economic outlook. It is unfortunately a case where, rupee has been struggling because of these outflows, perhaps because of reallocation on the equity side, perhaps because of worries on trade. But look, even on trade, we would say that India is a relatively closed economy. At most, the estimates range from a 0.5 to 0.8% hit on growth from tariffs. And, there is some likelihood that we will see some sort of a deal with India and the US. And so, again, even on that front, we may see things improve.
Right. But as the RBI decides to loosen capital controls, allowing more banks to fund things like acquisitions and IPOs, and we start to see also perhaps more consumption or consumer sentiment strengthening because of the GST reforms, Mittal, could these be actual support drivers for the rupee moving forward as in terms of demand for the currency? And could this also perhaps be seen as potential offsets for the weakening trend that we've seen so far? What are your thoughts there?
I think these could be offsets. I think obviously internationalizing the currency is going to be a very slow process, however, and it's not going to happen overnight. And even in China's case, it's been a very, very slow road. And India doesn't really have the sort of Belt and Road type internationalization efforts that China has. So I don't think it's going to happen quickly. But nonetheless, the more that the rupee is allowed to internationalize and the more it's accepted internationally for trade and other transactions means that there'll be more inherent and structural demand for the currency, and that will mitigate against some of these pressures that we've seen on the rupee. But again, to your point earlier about volatility, it's not that the rupee is volatile here. Volatility has picked up somewhat under the new governor, but I think that's intentional. But no one's really worried about this currency getting out of control. And don't forget, the RBI has over $700 billion of FX reserves, a lot of ammunition should they need to use that to prevent the currency from weakening more sharply.
Of course, whenever we talk about the rupee or any emerging market currency, Mittal, we also have to talk about the US dollar and its own trajectory. Now, it seems that there were hopes that perhaps there would be more stability with regards to the US dollar, but it seems that the government shutdown and some new concerns about the American economy seem to be clouding the outlook for the dollar. Is that the case with how you're reading the greenback? Have you had to recalibrate some of your expectations, especially because of the recent shutdown and some of the new questions raised about the world's largest economy and what that'll mean for emerging market currencies like the rupee, for instance?
Well, I think, look, firstly on the dollar, we do see some ongoing vulnerability in the near term. Our biggest concern is on the Fed's independence and whether that starts to erode even further here. And obviously, the focus was on the Supreme Court's decision on Cook, which has now been delayed out to January. Perhaps that provides a bit more relief. But to be frank, we're still constructive on the dollar into next year. We think that the US economy is holding up very well. We think that the data will continue to remain firm. AI spending is driving growth strongly. US asset markets are outperforming elsewhere. And, one of the only reasons the dollar does remain weak as it is currently is because a lot of these flows into the US have been hedged, but we think that's going to lessen as well. So again, we are more constructive on the dollar into next year. So in the meantime, if you put it to EM and rupee, it gives a window for emerging market currencies to do well. Volatility is low, so we do like carry trades. And actually, the Indian rupee is one of the only Asian currencies with some carry, so it could still be useful in that respect. But obviously further out, as the dollar starts to pick up momentum next year, that could be a little bit more negative for EM FX and EM local rates markets.
Yeah, Mittal, I think that also leads to my next question, because you've mentioned that while it's weak, it's not volatile. It seems that the depreciation is being conducted in a fairly orderly fashion. I'm curious, though, will there be a level that the rupee gets to where it becomes a bit disorderly, where it becomes a bit more volatile, perhaps more of a burden on the Indian economy? Because at some point, is there a point where it's a little too weak to be stomached right now in terms of India?
Well, I think on the one hand, a weaker currency is definitely helping India's export performance. We've highlighted a lot in the past how the currency pair with the CNH INR has been very important, and India's gained competitiveness there. So that's beneficial. Of course, I don't think there's a particular level that I would say here. I think it's a speed of the move. And if the rupee starts to depreciate much more quickly, much more aggressively from current levels, then I think you would end up seeing a scramble domestically to buy dollars, certainly from importers. And I think that would exacerbate the move higher in dollar rupee. That would be a major concern. So it's more about the volatility and the instability rather than the levels of the currency. I mean, obviously, investors will look at psychological levels around 90, for instance, but I don't see a particular level in mind that's going to suddenly say, hey, this is a real problem. It really is going to start to be the pace of the move and the volatility of the currency pair. And as yet, one thing we would say is that the weakness of the currency has been fairly orderly. It's not been particularly dramatic. It hasn't resulted in a big pickup in imported dollar demand, exacerbating that move higher in dollar rupee.
Mittal, so ultimately, how is this affecting your Barclays' long-term outlook, that is, for the rupee, both to the end of the year and the end of of the current fiscal year? Where do you guys see the rupee trending for those two timeframes?
I think into the end of the year, we see scope for some recovery of the rupee and potentially towards sort of the 87 levels. But admittedly, that's still a long way from where we are. And you may need to see a bit more dollar weakness for that to take place. But again, the issue for us is that even if the rupee does start to appreciate from here, it's likely that the RBI would be buying dollars and cementing their FX reserves. As we go into next year, we would expect to see a move through 89, even towards 90 levels, as the currency moves in line with a broader, a stronger dollar environment, rather than any inherent India or rupee weakness. It's going to be more in line with the overall dollar strength or recovery that we're expecting next year. So it's still going to be a much more gradual depreciation of the rupee than we've seen in the last few months in terms of what we expect next year.
All right, so gradual seems to be at least one of the silver linings with regards to the rupee's recent weakness. And as long as volatility doesn't pick up, it seems that the rupee itself will continue to move in an orderly fashion. Mittal Kotecha from Barclays, thank you so much for joining us today on Inside India and helping us get a deeper insight into where the rupee is heading and whether it is a problem or not. And remember, it's all about the volatility more so than the actual overall weakness. Well, it's time now for a quick break, but more news and updates will be coming up on the other side, including the Taliban's foreign minister's scheduled visit to India. Stay tuned. We'll be back in 2 minutes. You're watching Inside India. Welcome back. You are watching Inside India, and here are some of the stories we're keeping tabs of outside of India. Israel has intercepted almost all of the boats in the global Sumud flotilla, which was carrying aid to Gaza. Organizers say more than 450 volunteers on board those boats have been detained. Israel says these volunteers remain safe and in good health and will be taken to the city of Ashdod. Hopes are pinned on the one boat that's still on course towards Gaza, called the Marinette. The flotilla set sail in August with food and medicine. 2 people were killed and 3 seriously injured in an attack at a synagogue in the United Kingdom. The assailant rammed his car to pedestrians and stabbed a security guard during prayers in Manchester. World leaders, including Israeli officials, condemned the attack, calling for stronger measures against anti-Semitism worldwide. British Prime Minister Keir Starmer pledged heightened security for Jewish communities across the United Kingdom. And the foreign minister of the Taliban is set to visit India next week, marking the first diplomatic development between the two countries since the Taliban's contentious rise to power in 2021. Until now, New Delhi has limited its engagement with Afghanistan to aid and people-to-people outreach, while voicing concerns over terrorism and the rights of women and minorities. Most countries still do not recognize the Taliban as a legitimate government, though Russia broke ranks in July by becoming the first to formally acknowledge the regime. Coming up on the show, a new wave of listings in India's IPO market. WeWork India opens a subscription today. We will discuss what it means for India's IPO market in just a little bit. Stay tuned. You're watching Inside India. Welcome back. And we are counting down to the market open in India this Friday. We take a final look at Gift Nifty futures and still looking quite optimistic as compared to the Wednesday close. We are coming off that Thursday holiday. It seems that they are foreshadowing a 100-point gain. Now, keep in mind the Nifty only needs about 64 points to actually go back to that 25,000 point level, but it is coming off of a couple of weeks where we've seen some shakiness in terms of investor sentiment. The Indian rupee now starting to look a bit firmer after seeing a bit of weakness earlier today. 88.66 is where the local currency sits against the US dollar. WeWork India opens its IPO subscription today, setting a price band of 615 to 648 rupees per share, targeting a valuation of nearly $980 million. This is according to Reuters. The IPO is a pure offer for sale, meaning proceeds will go to existing shareholders, primarily Indian real estate developer Embassy Group. The listing will place WeWork India in direct competition with domestic rivals SmartWorks and Office Space Solutions. More broadly, this highlights renewed momentum in India's IPO market, with a wave of offerings lined up this month. LG Electronics India and Tata Capital are also set to open their books next week. The Indian markets are set to raise up to $8 billion through IPOs in the final quarter of 2025. Well, let's talk more IPOs and listings. Vinit Surana is partner of financial accounting advisory services at EY India to talk about the massive surge in terms of IPO activity out in India. Actually, Vinit, thank you so much for joining us. And it seems like every other day we're talking about a new exciting IPO out in India. First Tata, LG, now WeWork as well. Well, how surprising has the pickup in IPO activity been, actually, and how busy has it kept you folks at EY?
JP, thanks for having me on this show. I think a couple of things here. I mean, the momentum in India is actually very vibrant. We've seen this coming over the last 5 years. If you look at the trend, primarily driven from the economic growth, the underlying economic growth. People want to participate in that growth, and one way of participating is, through the equity markets. We're also seeing significant amount of retail participation. So if you see it, demat accounts were about 40 million in 2020. That's risen to about 120 million accounts in 5 years' time. So significant amount of domestic capital flow that's really flowing through, and then that's really driving the IPO momentum. In addition to that, if you look at the flows in India from domestic versus foreign institutional flows, domestic fund flows have practically been twice. I mean, if you look at 28 billion in about 2020 to about more than 55 billion per se that's come through just domestic capital. So really, this is it is really Atmanirbhar Bharat in the financial terms that's really driving it. And you see a significant amount of momentum of these listings coming through as well. So we do expect the momentum to continue.
Yeah, and, as you mentioned a while ago, the growth of the domestic retail market in India has been quite encouraging. But then again, this is also happening as we've noticed that foreign funds have shied away from Indian markets for a number of reasons during the last couple of months. And also, there are also questions as to whether or not the Indian Nifty itself, while gaining year to date, it hasn't been as rambunctious as previous years. Can you help us contrast this, the seeming confidence of companies to list in India versus the seeming sluggishness and hesitance from foreign funds, and also in terms of the equity run-up that we've seen so far that's been a bit muted as compared to previous years?
Absolutely, JP. I think both are different factors driving this. So if you really look at the foreign flows or foreign funds looking at India, they will look at capital allocation at a global level, right? So it'll be India relative to the Japanese market, the US or the Chinese market to some degree, and therefore flow and allocation decisions would kind of be driven partly through that in terms of which equity markets become more appealing from a time-to-time perspective. Equally, if you look at from an Indian context perspective, the Indian companies are certainly growing year on year, and what may appear as higher valuations today, as earnings catch up, as profitability increases, those ratios are again ultimately relative, right? So if you're about 100 today, and if your profit is about 150 tomorrow, then the ratios and the private equity ratios will, of course, will also be managed to that degree. So to some degree, that is the relativeness that comes in. In addition, I think what we're also seeing is most of these offerings today are offered for sale. So there is that capitalization on the Indian valuation that's coming through. But as the underlying growth is also increasing hand on hand, you do see some of these companies, look at that growth capital in the future and also looking at listings. And most of these are MNCs also looking at the Indian market to liquidated some of their crystallization of holdings in India. Equally, you've got Indian companies which are thinking of going global. So as a result of that, there's a both push and a pull, both from the flow and as well as from a capital perspective. And the only other point I'd also add here is when you look at foreign institutional funds looking at India, this again relative because their fund flow is about $16 billion in the year to September 25, compared to if I look at old full year foreign funds, or even in 25 years back, that was about 19 billion for the full year. So the foreign fund flow or the foreign percentage of investment remains fairly kind of stable, but the domestic composition of flow is really increasing, nearly 2x from 26 to more than 55 billion. So that's really kind of the dynamic in the Indian market, and we expect that to continue with some mega listings, which are also planned in 2026. So you'll see the activity continuing here.
Right, and one thing that might be also keeping some of these foreign funds perhaps a bit shy on India is that there's been raised that, hey, you know what, the run-up's been great, but it looks a bit pricey right now. I'm curious though, Vinit, while investors might shy away from high valuations, is this actually a boon for companies that are trying to list in a market like India, meaning that if the valuations are high and there's a tolerance for these high valuations, perhaps I can get more bang for my buck if I list now in these market conditions. Do you think that tracks, or is that a bit too simplistic?
No, I think there's a lot of truth in what you're saying, JP, right? I think there is that capitalization of the current valuation to that degree. As I mentioned, whilst there's the capitalization on one hand, and whether the Indian MNCs or promoters are looking to take advantage of the situation, I think we need to also keep in mind that the underlying growth has been fairly robust. Companies are doing well, so to that degree, the sales and the forecast of that is fairly positive and robust. It's also kind of supported by measures like the GST cut very recently. So whilst the effect of that is still yet to be seen and difficult to comment on, but the favorable economic environment that's coming through, driving the underlying consumption and sales, is also supporting the growth overall. So all in all, it's a win-win situation to that degree. And some of these funds, having reduced their investment or allocation to India, we've seen that come in, in tranches. So there is a bit of a, call and put to where it comes through. But overall, I think it'll still remain vibrant and energetic in the Indian markets.
So, Vinit, we were talking about the GST reforms, a lot of positive new developments that could support the Indian economy. But perhaps one of the more interesting ones was the announcement, the slew of new changes, regulatory reforms that the RBI announced yesterday that overshadowed the policy decision, among them also allowing more domestic companies to finance acquisitions and also looking at freeing up more funds to support initial IPOs. Now, we've already seen a strong run-up of IPO listings recently before this announcement. Do you think that the announcements made by the RBI might even provide another level, perhaps another source to turbocharge this even further than we've seen?
That's right, JP. I think, it's the RBI changes. If you look at the global economic environment, that's again very fairly conducive as well. You look at the Indian government, as I mentioned, the GST changes coming through, again, really positive as well. And I think overall, when you look at it from an Indian domestic perspective, the Atmanirbhar Bharat, the consumption pattern, the underlying, socioeconomic demographics, the growth in the companies and profitability of that, the continuous investment by domestic, funds into the Indian markets, and there are, so much of capital chasing so little companies. So to that degree, I think it's driving that momentum. The government policies, including both from a monetary as well as the underlying economic policies, are supportive of that. You're seeing that in the infrastructure sector, consumer, financial services, real estate, and so I think overall the growth is positive. There is momentum in the same direction. It's also bringing through aspects of unity. So there is uniformity of moving things in the same direction forward as well. And I think it's the congruence of all of these factors, and also from a global market perspective, India is a bright spot, and it continues to remain a bright spot when you look at returns and equity returns, whilst there are other markets which are again fairly attractive. So that's kind of explaining some of the capital allocation decisions by the FIs.
No, it's not uniformly confident, I think, in the markets. In fact, one thing that was pointed out to me just now is that we did notice about Geo platforms, which was one of the more talked about ones just about earlier this month, decided to defer its own IPO to next year. Again, timing is something relative. Some feel that the timing's better next year. Some feel that now is a good frame to launch IPOs. What did you make of that decision to defer their IPO to next year? And is that something that perhaps needs to be looked at in more detail when we're evaluating the timeline and the appetite for Indian companies to list right now?
Yeah, I mean, JB, I would not read too much into that statement or that one particular observation. And the reason, I would say that in my personal view is three things. Firstly, an IPO process or journey in India is at least 9 to 12 months, broadly speaking, right? So therefore, there's a significant amount of preparation that companies would want to do to make sure the underlying matrix fundamentals are all kind of conducive to capitalize on the growth environment or for that the market perspective. Even the listings that we're seeing today, in this quarter and early September, you'll see much of this is because, some of these companies have been preparing for at least a year, if not more. And that preparation is taking time, and you're seeing some of these results now. So the deferral of some of these IPOs or even other companies waiting and pausing is purely because, A, they don't want to be seen as being opportunistic, but they want to be ready to operate as a listed company in the market. Operating successfully listed companies is much more important than just being listed and the preparation that's required beforehand. So I think it's a lot of factors that will go into the decision making of really, a listing, and listings cannot necessarily be timed per se. It'll have to be taken into account from the underlying growth, the projection of the company, and the capital allocation that's needed as well.
So perhaps the moral of the story there is that no matter how hot or exciting an IPO pipeline or market is, you have to make sure that the offering is done right and you get it right before you actually list. And perhaps that's what the folks at Geo are estimating. Still, a very exciting time to be looking at that very rambunctious pipeline out in India. And thank you so much for giving us better insight into what's driving that. Vinit Surana from EY India, we thank you so much for joining us today on Inside India. Well, in Singapore, it's race weekend, and since its debut in 2008, the Singapore Grand Prix has attracted more than 500,000 international visitors and generated more than $1.5 billion in tourism receipts. But the island isn't the only place in Asia making money from the race. In fact, CNBC's travel editor, Monica Petrelli, is here with more on this particular phenomenon. This is like a neighborhood effect that's really lifting everybody in the Southeast Asian or Asian neighborhood right now, Monica. And it's not just Singapore that's exclusively reaping the rewards of this very famous night race now on the circuit.
That's exactly right, JP. And when we started looking into this, initially I was just looking in to see whether the money, all the money that flows into Singapore, extended beyond the track. We know that those businesses typically do very well, but did it extend into the neighborhoods, as you said? We found out that the money actually goes so much farther, which could help calm some of the angst that some of the neighbors have with Singapore winning things like the Singapore night race, as well as, say, Taylor Swift concerts. So some of this money being distributed around the region. So take a look.
From $84,000 hotel suites to weekend packages that sell for six figures, Singapore's Grand Prix is a money-making machine for businesses near the track. But companies far from the 5-kilometer circuit are cashing in too. The ride-hailing company Grab gets an uptick in bookings during race week, while Taylor's get a boost from thousands of business travelers who attend conferences around the race.
So even small businesses like coffee shops and this bakery here south of Chinatown say they see a bump in business from Singapore's F1 race, an event which has netted their country more than $1.5 billion in tourism receipts since 2008.
We do see the impact of F1 spilling out even beyond the racetrack, where tourists and even locals are exploring the surrounding neighborhood. So the increase in orders goes up to 20%.
They start to pick up maybe from Wednesday, Thursday. That's where the customers or the tourists are streaming in for F1 week. We just kind of like increase our staffing because we know that there will be an influx of customers.
However, data shows that tourism revenue from Singapore's F1 race not only trickles through layers of its own economy, but that of other destinations in Asia Pacific too.
We have different travel platforms who are bundling the F1 experience with other islands in Southeast Asia, including Bali and Phuket. So visitors will come to Singapore, will enjoy the F1, and then they move to Bali for 2 or 3 days. And that's actually amazing for the economy of the region.
The marketing platform Sojourn analyzed flight bookings for the 2025 Singapore Grand Prix, finding that among international attendees with onward bookings, 25% of Americans and Canadians are visiting Japan, 18% of Europeans are headed to Thailand, and nearly 1/3 of Australians are tacking on trips to Indonesia, namely Bali. Bookings show incoming travelers are also combining Singapore's race with trips to China, South Korea, India, Malaysia, the Maldives, and Fiji.
So this matches a 2025 visa report, which shows other races in Asia Pacific generated tourism revenue outside of their host cities as well.
According to Visa's data, foreigners who attended this year's Melbourne Grand Prix traveled throughout the Australian state of Victoria, to the Yarra Valley wine region, and even as far as Sydney. And 20% of foreigners who attended the 2025 Japanese Grand Prix in Suzuka also went to Okinawa, a city more than 700 miles away. Tourism revenue attributed to F1 races is largely measured in the week before and after a race. But there is more income that is harder to track, as it comes long after the car engines stop and the champagne bottles are popped.
You have millions or 100 millions of viewers over the television, social media. They are watching Singapore. They are seeing skylines, modernism, safety, and convenience.
Scenes which drive more interest to visit Singapore and other destinations in the region.
Now, those most likely to come to the Singapore's night race and then plan a trip elsewhere in the region are usually those that are long-haul travelers. And that makes sense because if you're coming all this way, maybe you want to see another destination as well. This typically makes up about 1/4 of attendees, but a Sojourn in analyzing flight data shows a change in who's coming to this race, saying more people coming from within Asia, specifically from South Korea. We're seeing numbers, at least in terms of flights, doubling. Also, China nearly doubling, with some decreases in those coming from the United Kingdom and the United States. Now, interestingly, JP, India making up about 3.4% of those who will be flying in for the race, which puts it ahead of the Philippines and about double that of Thailand.
Well, and it also just shows that the positioning matters here as well. That Singapore is telling the region, hey, I'm not trying to take away all the tourism. I'm actually the launch pad. They just come here first, but don't worry, they're going to come to your part of the world. Now, Monica, there's so many other interesting conversations around this time of year in Singapore. In fact, you actually got a chance to sit down with the CEO of McLaren and OKX. Tell us about what you gleaned from those sideline chats that you had with these two.
I did. So yesterday, right next to the track, I talked with Zach Brown, CEO of McLaren, as well as Haider Rafiq, who's the global managing partner and the CMO of the crypto exchange, OKX, who is a primary partner. And we talked about this partnership, how it works, and whether it will be extended, which, if it is likely to come next year. But before that, we talked about the rising interest in F1, how much it's increasing in terms of fans, but also cities. More cities from London to Bangkok saying, hey, we'd like to also host a race as well. We want to get in on the action. And here's Zach Brown talking about how he thinks that F1 could accommodate these requests without adding more races to the yearly schedule.
I think what we'll get into is a bit of a rotational schedule. So I'm a fan of, call it 20 fixed races, and then maybe 8 markets that rotate every other year. So I don't think logistically we can do more than 24 races a year. It's a big strain on the team. I think every 2 years is definitely enough to keep everyone interested. I think that's a natural way to extend our geographic reach without expanding beyond 24 races a year.
Will there be an announcement by either one of you about an extension?
Too early to tell, but I'll tell you, we love each other. Our teams love each other, and we've had such a fun working with McLaren, so I cannot see why.
And you also partnered at a time when the McLaren team wasn't exactly where it is today. So do you get any sort of bonus points for coming in at that level?
I call it bragging rights. I do think we have the bragging rights to say we timed ourselves. We took a bet on McLaren. I think we embraced their heritage. We knew they were compounding their efforts at that point in time. And it was just a matter of time that they were going to get ahead on the grid now.
OKX partnering with McLaren before it was the McLaren of today, before it was winning races. And in fact, JP, McLaren expected to clinch the Constructors' Championship at this race this weekend, which is the award that they give to the teams, not the drivers. That's separate. We know that there's a big competition between McLaren's drivers, but that would be the second year, if it does happen, the second year in a row for McLaren.
And a big turn of events or change in terms of fortunes for McLaren. They're just middling just a couple of years ago. They are now at the top of the heap, but Monica, I am still waiting for an American driver to actually show up and contend in the F1 races. But that's a question we'll pose to Zach Brown and the rest of F1 in later times. But for now, McLaren doing quite well in fascinating conversations, Monica. We're glad that you were able to give us a slice of what you actually talked about on the sidelines there. Indian markets have joined the trading day, and we will look at some of the movers in Mumbai after a short break. We will be back in about 2 minutes. Don't go away. And Indian markets have now been trading for about 8 minutes. Unfortunately, the Nifty 50 has reverted to losing ways. It is now about 40 points below the Wednesday close and coming off of that Thursday holiday on a bit of a sober and a bit of a sluggish note, actually. Take a look at the Indian rupee, which is also softened today at about 88.72. It continues to hover close to its weakest levels on record, and so far it's a bit of a slow start, that is, for Indian markets, and the Nifty 50 once again trending in the red. But let's look at some other movers in the Indian markets today. India's Jindal Steel now has a clear shot at acquiring ThyssenKrupp's steel business after Czech billionaire Daniel Kretinsky agreed to sell his 20% stake and step aside. The move removes a major roadblock that allows ThyssenKrupp to focus fully on negotiations with Jindal Steel International, which also recently submitted an indicative bid for the entire unit. Jindal's entry could mark a significant expansion into European heavy industry at a time when the region's steelmakers are struggling with high energy costs and Chinese import pressures. Abu Dhabi-based international holding company is making a big bet on India's housing boom. IHC will buy a 43.5% stake in Samman Capital for nearly $1 billion, acquiring control through its affiliate Avenir Investment. The deal, which still needs RBI and competition clearances, will trigger a mandatory open offer to other shareholders. Samman, a mortgage lender, says the investment underscores IHC's confidence in India's financial sector. And so far, we're seeing shares of Samman Capital, though, falling by about 2.3%. Despite these announcements, they are one of the notable laggards so far in the opening minutes of India's Friday trade. A new list says India's billionaire club just got bigger. The M3M Hurun India Rich list 2025 shows the country now has 358 people with wealth above $1 billion. That's up by 24 from last year. Mukesh Ambani retains the top spot with a fortune of over $107 billion, followed by Gautam Adani at about $92 billion. And other few notable new entrants include Bollywood actor Shah Rukh Khan, joining the club for the first time with a worth of about $1.4 billion.
Forum is an expression of freedom and trying to be resolute and resilient.
And that's all the time we have today on Inside India. But before we go, we're leaving you with a look at the Vijaya Dashmi celebrations in India, a festival that celebrates the victory of good over evil. Keep watching CNBC, though. Access Middle East is up next. Have a good weekend.